is the reality of the Fed's trajectory from here. 7.7% in CPI is still far away from that 2% target. And even a 50 basis point hike that's anticipated in December is not dovish. So we are continuing with tightening market conditions.
Several things are happening this month, and one of the big economic news is the declining inflation rate. CPI is down, and so is the PPI. Things seem to be looking up for the economy, but still looking gloomy for the crypto market. Raoul Pal gives a stern warning concerning the crypto market and his expectations for the economy. Before you proceed, take a second to click the subscribe button. Thank you.
Are things turning? Is inflation coming off? And is therefore the rate of change of rate increases going to reduce or not? So my view is that we've seen the peak in CPI. The market's starting to realize that they've been overestimating CPI, and therefore inflation is going to start coming off. We saw that with PPI today as well, and I think we'll start to see unemployment pick up, whether it's this month or next month. Those are the signals the Fed is looking for to slow down. So when they slow down, it's the rate of change of interest rates that matter, whether they do another 50 and another 25 or another 50. Either way, we're getting towards the end of the rate cycle where they will pause. The pause is enough for the market to perceive it as the lack of pressure holding this balloon underwater. And when you take it off, the balloon can rise. And we've already seen the equity market take that well. I don't believe that means if the equity market's going up, inflation's coming back all over again, we're in a big mess. I just think the Fed just stay on pause and wait for inflation to fall below the Fed funds rate. My guess is inflation will be below 4% sometime around February, March of next year. And in which case, if it continues to fall, which is my base case, in fact, I think inflation goes negative, then we will see the Fed eventually pivoting and going to rate cuts instead to stimulate. But that game is to be played for. Right now, it's a matter of the end of the macro story and liquidity coming. The global liquidity cycle is currently led by China. Chinese liquidity has turned up, and I put a tweet around this amongst all of my macro crypto views. Chinese liquidity leads, global M2 should follow, and as we start getting through the liquidity cycle, liquidity is one of the key drivers of crypto. Crypto is driven by two things: the technology, which is Metcalfe's law, the adoption of that technology and its uses, which is Metcalfe's law, to remind you, is the number of connections on the network and the number of people on the network and the number of connections. So how much network activity is there amongst how many people? So that is Metcalfe's law. That's the technological driver that drives the exponential growth. In the middle, you have cycles. The cycles are driven by liquidity, same as all assets. And liquidity being drawn out as M2 shrinks, the Fed raise rates, other central bank raise rates, means that crypto falls. As liquidity flattens out and starts turning up, then crypto rises, as do other risk assets. So that's the basic cycle. Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend, and that becomes an extremely interesting time to focus on accumulating crypto.
The White House is excited by the recent inflation numbers, particularly the Producer Price Index, PPI, which came in lower than expected. PPI is used to measure the cost of production for manufacturers. A low PPI is positive because it shows that manufacturers don't have to spend much on production. Hence, they're able to produce more, and this would mean cheaper goods in the market. Another positive effect is that exportation goes up, and this would improve the nation's balance of trade. PPI was expected to come in at 8.3%. Instead, we had a lower 8% PPI for the past month. The index stood at 8.4% in September, and economists had expected a decline, but not as much as we had. The annual core PPI is even better. According to the U.S. Bureau of Labor Statistics, the annual core PPI dropped from 7.2% to just 6.7%. Against this backdrop, the U.S. dollar lost 1% the day the PPI report was released, bringing the dollar price index down to 105.85 points. Before this report, Treasury yields were on the rise. It would have been expected that the economy was rebounding and investors would be putting money back into the markets, but Treasury yields had instead climbed. The policy-sensitive 2-year Treasury went up by 8 points to take the new yield to 4.408%, while benchmark 10-year Treasury yield went up 4 basis points, taking it to 3.872%. In reaction to subsiding inflation, both Treasury yields have fallen by about 30 to 32 basis points. Raoul Pal is being optimistic that this is the end of a cycle and the Fed would start easing. He also expects a rebound in M2, which would bring in more cash and credit into circulation and stimulate the markets. In this anticipation, he expects crypto prices to rise. Next, he talks about the crypto market.
Humans love sex and they love leverage almost equally. It's ridiculous, but that's what they do. Even though crypto has Bitcoin itself performs at about 140, 50% a year through the cycles. And yet people still want to take leverage on that because they think it's not enough money. It's ludicrous, but I can't help it. It's a degen market. And I also understand that people want to do something with YOLOing because people are disadvantaged in the financial world. They can't get access to products and markets, and crypto gives them access to like early stage VC style technology investments that have exponential upside. I really understand why people get involved, but I don't see many VC people using leverage in VC because these things are fucking volatile. So just be careful out there.
Since the crypto market started its stagger down the slope from its $2 trillion market cap in May down to under $1 trillion, a decline that has seen over 50% of the market wiped out, a lot of crypto businesses have also been wiped out. The market's integrity and ability to take shocks have been tested, and we're beginning to see the ugly underbelly of crypto lending and leveraging that has plagued the crypto market. The crypto market is over-leveraged, but what does this mean? To leverage means to use borrowed money to trade, then return the borrowed money, usually with interest to the lender. Unfortunately, many crypto businesses such as FTX are leveraging the funds of their customers without their permission. This is fraud. Mike Novogratz, a billionaire and investor in Terra Luna, has admitted that the amount of leveraging going on in the crypto space is dangerously high and unsustainable. He says that he had not anticipated that such a magnitude of leveraging was going on, and how shocked he was at finding that out. The market has seen several billions wiped out within a year due to several crashes of crypto exchanges, lenders, and hedge firms. Raoul Pal says leveraging is driven by greed and is extremely risky. Those putting their cryptos in firms using them to leverage are at extreme risk of losing it all.
I think the dollar's top for now. I do not think the dollar bull market, structural bull market, is over. I think the dollar milkshake theory is alive and well. This tipping point where growth is falling, starting to fall, and inflation is coming off, and the rate of change of rates comes down, the dollar tends to do badly. If we hit the eye of a recession, the dollar will do well. It always does. The dollar has a smile. When the world is going really well or really badly, the dollar does well. So in the middle, and we're going to that movement phase, the dollar does less well, which is why the dollar's been selling off. And that's normally a net positive for crypto, but obviously we've got a lot going on in the crypto market.
There you have it. What are your plans going forward? Give this video a thumbs up if you would like to see more, and don't forget to subscribe to the channel, as our next upload promises to be explosive.